Consumer discretionary is the worst sector of the year. Some of the biggest losers are retail names like Deckers, Lululemon, Ross Stores. Is the sector, though, primed for a rebound in the second half? Joining us now is Dana Telsey, Telsey Advisory Group CEO. Dana, good to see you.
Nice to see you, too. Thank you for having me.
Yeah, it's good to have you, especially because there's such a mix of data. We were just talking about this labor report. Overall, great. The market's up. But underneath the surface, for younger people, for discouraged workers who've been seeking employment and haven't been able to find it, it's not so great. And then we just had Max Levchin on from a firm yesterday saying, actually, the consumer looks pretty strong to him. All of that should bode well for the second half. But is there something that we're missing?
Overall, I think the second half of the year, some of it will be dictated by product newness, but really tariff implementation dictates the sentiment. And what we've been seeing is you've seen a trade down of the customer. When a Walmart talks that their biggest growth is coming from their highest income consumer, look what's changing out there. We're also seeing companies overall being more cautious. They're being more cautious in a couple ways. I think that we're going to see inventory caution. Goods had to be ordered for the holiday season already. We know what was happening with tariffs, and tariffs definitely dictate sentiment. So I think there are brand leaders that work, and where you're seeing newness drive demand, like at Birkenstock with the closed-toed shoes. Collaborations mean a lot. It'll be interesting to see on Thursday, Levi's and Nike's collaboration debuts. Everyone's getting a piece of Beyonce, and it is those unique items we can take a better price. But in my price tracker that we've been doing for 11 weeks now, 80 different items, we haven't seen much uptick in terms of prices. I'm waiting for the middle of July when back to school really takes hold.
So, Dana, is the strength with the big established brands and maybe the bigger footprint retailers, or is it with the up-and-comers and the boutique names?
It's about value. It's about the off prices and the discounters, and it's about the brand leaders. So the brand leaders, like what you're seeing out of Birkenstock, what you're seeing, Levi's is doing well too from everything that we're seeing also. It's brand leaders and it's value. And the up and coming, yes, you have some up and coming because you have some revivals going on. Look at Wolverine Worldwide with Saucony up 30%. That was definitely encouraging. And the continuation of strength at Ralph Lauren and Coach.
I want to go back to trade deals because Vietnam to me was particularly interesting. A, you got a 20% tariff on exports out of Vietnam into the U.S. B, you have this transshipment tariff, which is 40% on goods that are coming through Vietnam from third countries, namely, arguably squarely aimed at China. And yet we saw Nike, Lululemon, Crocs, On Holdings, some of these names that have big supply chains in Vietnam actually move higher on the news. How does that set us up for other trade talks and how to think about, as an investor, some of these supply chain dynamics?
The supply chain dynamics are very challenging, and it's going to be about what does inventory growth mean relative to sales. We're seeing freight expense continue to be a headwind. And overall, the price increases that we're hearing that are yet to come are going to be in the mid to high single-digit range. Everyone is trying to diversifying their sourcing, and I call it a third, a third, a third. There are three things retailers can do to navigate these tariffs. Diversify the sourcing to other countries, share the costs with the manufacturers, and raise prices to the consumer. The reason why you saw so many companies suspend earnings guidance at the beginning of first quarter earnings season is because it was hard to get your handle on what does this mean for margins and what are my costs going to be. But everyone is shifting, and the one thing that is for certain, they're not making a lot of goods in North America, particularly on the softline side, given the heavy labor costs. So it'll still be brought in, and the level of tariffs will dictate the sentiment of the stock prices. What you saw yesterday, people thought Vietnam tariffs went down a little bit, but weeding through everything, it's not a cheap date still with Vietnam and the tariffs.